Hello and welcome to Forex.Academy, your #1 website for Forex and crypto education and analysis. In today's edition, we'll be discussing the USDJPY acting as a barometer to sentiment. The coronavirus, or to give it its technical name, Convid-19, is dominating the financial markets, which are broadly holding their nerves apart from a few jitters overall, remaining steady at the moment. And this is because of a lack of information regarding the true economic impact of this outbreak. This can only be analyzed with data, and because we are in the early stages, there is no clear defined economic basis to say how this has or will affect global economy. In the past, events such as the avian flu, Ebola, and SARS have all caused losses on global equities, and where safe haven currencies such as the yen and Swiss franc have been bought along with gold and precious metals, and generally where oil has been sold off due to perceived risk to global economic slowdown and flight to invest in less riskier assets. What we have learned on such occasions is that the markets have subsequently turned around and rallied at some point close to or after the event has passed. Although China now is at a much greater power than any time of these previous events and has a significantly higher percentage in terms of global gross domestic product, which is estimated at nearly 20%, the Chinese government has said that it believes that the economic impact of the virus will be short-lived and that it will meet its trading obligations with its global partners. While this has pacified the market to a certain extent, one wonders about the reality of the virus, which seems to be not coming under control as quickly as the Chinese government led us to believe. This leaves some analysts wondering if indeed the West has been given the true picture of what's going on in mainland China regarding the outbreak and the true extent of those infected and dying. And of course, if this does turn into a pandemic, the above sentiments will change in a heartbeat. Until such time as the true economic statistics have been released by the Chinese government, the markets will be driven by snippets of information being released on daily statistics from China of those infected and dying and the number of incidences outside of China. And more importantly, should any such incidents begin to spread into other countries, will be of the utmost interest. In order to trade cautiously at these times, and especially for those traders who may not have access to real-time news release information from entities such as Reuters and Bloomberg, one way to try and gauge the sentiments of the market is to keep a close watch on the USDJPY pair, which has been acting as somewhat of a barometer to news release surrounding this event. Any sell-off in this pair or short spikes in either direction will almost likely be on the basis of news events regarding this virus, and where traders then go fishing to find out what information is available. Let's take a look at a couple of examples. First of all, example A is a 1-hour chart of the pair. If we drill down in more detail at this chart, as in example B, we can see that the yen was losing ground against the dollar on the 4th of February at position 1 on our charts. And this was because the Chinese government said that they had the virus under control and that it would meet its trade obligations and the impact to its growth would be minimal and short-lived. The market sentiment became more positive and drove price action up to the key level of 110.00. However, jitters ensued and the virus continued to give bad news, with cases breaking out in other countries, and the yen became a safe haven currency again as the market moved from position A to position B. The sentiment again was reversed. And as we can see, by the 10th of February, price action moves up again to test the 110.00 key area before spiking above it at position C. The sentiment which drove the pair up initially during the uptrend at position 1 is reversed by a hammer blow at position 2, where the market learned of a massive increase in the number of deaths overnight on the 12th of February, which amounted to 250 people and which sent the pair back to position D. This ABCD formation confirms consolidation, and with the A and C acting as an area of resistance at the key level of 110.00, and where B and D confirms the support line. The move to position 1 coincides with improved sentiment around the crisis, whereas the move lower from position 2 coincides with negative sentiment, and where at position 3 the price action has become muted and has not returned to the top of the resistance. This would strongly indicate the high probability of negative sentiment and the likelihood of a move lower to retest the support line and beyond as mood and sentiment becomes soured. If you enjoyed the video, then please like and subscribe and leave a comment down below about anything you would like us to discuss in future, or if you have any questions about this particular video. Have a great day.